Hey, good afternoon, everybody. This is Carl with Mountain Seed. I just want to let you know you're in the right place. We're going to get started in just a couple of minutes to give people a few minutes to get settled in and logged in. So just hang tight till a couple minutes after the hour. Hey, good afternoon, everybody. This is Carl Streck with Mountain Seed. Thanks for joining us on the second part of our webinar series with Reliant. We're really excited to partner with them to offer our clients a variety of different services outside of real estate valuation. You guys heard from Neil, I guess it was probably last month or a few weeks ago, on business valuations, and that was very well received. We're excited to welcome Rahul Patel with Reliant to talk about machinery and equipment appraisals. As you probably heard if you were on the last webinar, Reliant has built a great reputation throughout the industry of providing valuation services to many of the top 10 banks. I think maybe 6 of the top 10 banks are working with them, but very well respected on the banking side, the SBA side, and so we're really grateful for them joining us today and helping us out and helping our clients out. So a couple of housekeeping items. If you do have any questions, feel free to chat them in the question bar, and if they're relevant during the presentation, then we'll chime in and get those questions answered in real time, but we will leave some time at the very end to answer questions as well. So you don't feel like you have to ask this, the slides will be available after the presentation as well as a recording, so that you can reference those as well. So without further ado, I'm going to turn it over to Rahul.
Good afternoon, everyone. So as Carl had mentioned, my name is Rahul, and I am with Reliant Equipment Appraisals. I'm one of the principals and the co-founder of the company. I received my original certification about 6 years ago through the NEBB Institute. Just a few months ago, I finished all my credentialing to get the master designation, so I get to call myself a master certified machinery and equipment appraiser. Basically, it just means that we've gone through many years of continuing education. It has minimum report requirements and stuff like that. So it basically just says that I've done my due diligence to provide the reports that I'm providing. And again, as Carl had mentioned, together with our sister company, Reliant Business Valuation, we definitely pride ourselves as being one of the most reputable business valuation and equipment appraisal companies in the United States. Currently, we work with over 150 SBA lenders. So enough about me. Let me quickly go over what I'd like to try to cover with you guys today during this webinar. Give you a quick introduction into equipment appraisals, what to look out for them, what to look out in, what, I don't know why I can't get it out today, what to look out for within them, why you would need an equipment appraisal, and I think that's probably the most important part for everyone on today's call. We'll quickly put some appraisal hats on, and we'll try to maybe teach you guys how to do a quick appraisal of some equipment, and then whether you are requesting an appraisal from us or from Mountain Seed, basically the type of requirements that you might need to actually get an equipment appraisal. So what exactly is a certified equipment appraisal? The main thing that you want to look out for in any type of equipment appraisal, and especially a certified equipment appraisal, is that it's USPAP compliant. So what exactly is USPAP? USPAP stands for Uniform Standards of Professional Appraisal Practice. And I'm going to read you basically the definition word for word from their website. It was developed by the Appraisal Foundation, and it's the generally recognized ethical and performance standards for the appraisal profession. It basically tells us how to do our jobs in a standardized fashion. It was adopted by Congress in 1989, and it is a requirement for all government-related appraisals. So that's why, even though it's not specifically stated, if you're doing any SBA work, we definitely recommend that your equipment appraisals be USPAP compliant, just like your business valuations and your real estate appraisals currently are. And two of the main reasons why USPAP is really important, especially when it comes down to equipment appraisals, is that it dictates that you have an intended use and an intended user, and it defines your standard of values. And I'll go over those two topics. USPAP covers a lot of other things besides that, but these two, I believe, are the most important, especially for lenders like yourselves. So the intended use. Basically, a report done for, let's just say, lending purposes might have a completely different set of assumptions and limiting conditions than one prepared for, let's say, tax purposes or for estate planning purposes. Additionally, the standards of value based on the standards of value might also be different based on the intended use of the report. So essentially, the key thing to take away from here is that, if you're ordering an appraisal, it really needs to be clear as to why you're ordering it. Even for lending purposes, there's many different reasons why a lender might order a report. It might be, because you're financing for an acquisition, or on the other side, you might need it for an analysis for liquidation purposes. So based on either one of those scenarios, it's important for the appraiser to know so that they know what assumptions and limiting conditions and, again, what standard of value to provide you. So let's talk a little bit about the standard of value. What exactly is it? It's basically the type of value that a report will dictate. For lending purposes, I'm going to concentrate on two different types of value. One's a fair market value, and the other, there are two. I know I said only two, but they're liquidation values. So there are other types of values as well. We have fair market value installed, replacement value. There are many other types of values that you could get. However, for lending purposes, these are the ones that I always recommend. So fair market value. We're going to take these standards of values, and we're going to try to simplify them into, let's just say, buying a car at a dealership and trading a car in at a dealership. So fair market value is what you would pay for the car at the dealer. You walk in, you walk out. It's a $20,000 car. The orderly liquidation value, let's just say you want to sell your car tomorrow. It's like if you sold your car to a private party. You listed it on Auto Trader for yourself, or you listed it on eBay, and you negotiated with the buyer, and you were able to sell your car. And the last is forced. Think about forced liquidation as if you were going to go trading your car at the dealership. You know you're not getting the best value at that point. When it comes down to the main difference between the two is the length of time that you have to try to sell. Orderly liquidation, we're looking at a 3 to 6 month window to try to sell something. Forced liquidation, we know we're getting rid of it in about 30 days. That's basically it's a fire sale. So what can you recoup in orderly liquidation? So if you know you have to go out and pay $20,000 for an item at a dealer, well, that $20,000 item, if you were to try to sell it private party, might go for $13,000. And now if you were trying to sell that $20,000 item and get rid of it in 30 days as a forced liquidation, you might only pick up about $5,000, maybe $7,000 for it. Typically, the rule of thumb is about 65% of fair market value will get you to OLV, orderly liquidation value, and about 25 to 35% will get you to the forced value. I know it looks bad, and there's not a lot to recoup there, but for any of you lenders out there today who have gone through the process of liquidating equipment, you're not really picking up. It's really tough to pick up what the item would sell for or anything close to that. There's a lot of expenses involved in trying to liquidate equipment, including auctioneering fees, storage fees, transportation fees, so on and so forth. Let's see. So what are the different types of reports that are offered? So at our company, we offer desktop reports and summary reports. A summary report, both reports, they go through the same amount of due diligence throughout our appraisal process. The key difference is that a summary report includes a site visit. We would go on site, we'd gather all the data, we'd verify that the equipment is there, we'd take pictures, and essentially do all that data gathering. With a desktop report, we would look to the client to provide this information and perform the appraisal sight unseen. Desktop reports are typically turned around in a few days earlier, obviously, because we don't have to schedule the visits, but about 7 to 9 business days, where one with a site visit would take about 10 to 12. And the typical pricing, as you can see, desktops start at $750, and the summary reports they start at $1,500. And again, just want to reiterate the point. For lenders, we typically recommend obtaining fair market value and orderly liquidation values in your reports. So who can perform an equipment appraisal? So if any of you were in on the business valuation presentation, Neil typically goes through the different designations that the SBA SOP dictates who can actually write a report, a business valuation report. It's not specifically, well, for equipment appraisers, there is no specific designation that the SBA would like for someone to have. The only thing that they really mention, well, first and foremost, they say that an appraisal may be performed by an appraiser, a broker, an auctioneer, a retail inventory specialist, or another expert. So basically, you say that anyone can write the report. However, they do say that they need to have some minimum qualifications, obviously education and experience, either some type of licensing, certification, or bonding, and obviously the last, which is a USPAP compliant, which is one of the USPAP standards as well, is that they need to be independent. So these three, along with providing a USPAP compliant report, is what you would need to look for from anyone providing you with an equipment appraisal. So they don't have to be a CMEA or an ASA or a CEA or anything like that, technically speaking, even though I would highly recommend it. They can be anyone that can write a USPAP compliant report that's independent and that has a proper, maybe insurance, and they have the experience and or education to be able to provide you that report. So the need for an equipment appraisal. Why do you need an equipment appraisal? So there's a few different things that I'm going to brush upon here, and this really gets deep into the SBA SOP. Obviously, before we start talking about the 7A program, your bank's internal underwriting and credit policies will dictate when you need an equipment appraisal. It's different for every single bank. Obviously, if you're financing collateral and the collateral is large and you don't know what it's worth, obviously, just like with real estate, you might want to think about getting it appraised. Whether you do it internally or send it out to a third-party company, it's obviously up to each bank, but it's always a good idea to at least go through the process of figuring out what it's worth versus going with maybe the borrower's word on it. So for the 7A program, it's typically used for collateral purposes. So any SBA lenders out there, you're going to have your use of proceeds, and then you're going to have your collateral section. So obviously the SBA states that, hey, you need to continue taking as much collateral as possible until the loan is fully secured. If the loan can be fully secured, obviously. So what do they define and what numbers can you use? So under the 7A program, under your collateral analysis, you can use 50% of net book value or 80% of an orderly liquidation value from an appraisal. So you only have two options. You can either use net book value or you can use 80% of an OLV value provided by an equipment appraisal. Obviously, if there's any liens, you'd have to take them out. One of the things I want to caution any of the lenders out there with is using net book value. If you're going to use net book value, just be careful because you have to make sure that the net book value has been calculated correctly. So what happens sometimes is, an accountant or the company, they stop depreciating their equipment at some point. So in 2016, the net book value was $50,000. In 2017, it's $50,000. 2018, it's $50,000. The question is never asked why it hasn't been depreciated, and then you use 50% of net book value of that $50,000 for your collateral analysis. Well, it turns out that, hey, you know what? We just stopped, the company just stopped depreciating the equipment. Obviously, they're supposed to be depreciating it, but they just stopped. And so you end up having the wrong number for your collateral. Now, that becomes a repair situation if there's ever a guarantee, if there's ever an issue with the guarantee. And I bring that particular case up just because I've seen it before. The OIG did a presentation at one of the NAGL conferences a couple of years ago, and this was the exact situation. And the lender had to repair the loan. It's unfortunate, but I saw it and I wanted to, and it's pertinent to fixed assets, so I wanted to make sure I brought it up just to make sure that we reiterated the point that if you're going to use a number, definitely make sure you're definitely doing your due diligence on that number. So in the 504 program, same situation. They clearly, in the newest SOP, they clearly dictate what they're looking for from an equipment appraisal for the 504 program. It's for any equipment that's being purchased from someone other than an equipment dealer. So that means if you're buying it from a dealer, you don't need to get it appraised. The SBA already assumes that that's going to be the fair market value, or if you're refinancing it. But if you're buying it from a private party, it needs to be you need to have an equipment appraisal, and it defines it right there. It has to be someone that's qualified to provide it. It's independent, and for the first time in the 504 program, they've stated that someone has to have, well, in this particular case, it says the appraiser has to have performed an on-site inspection of the equipment, and that it be dated no more than 12 months prior to the date of inspection. So this is kind of nice, where it's something new in the SBA, in the SOP, where it actually dictates to us what they're looking for within that particular program from the equipment appraisal. So, basically to go over here again, it's just, you need a site visit for the 504. It has to be from someone who is independent and is qualified. And again, it's for any equipment that is not being purchased from a dealer or being refinanced. So any private party transactions for equipment, they would require an equipment appraisal for the 504 program. And on the other side of things, the 7A and the 504, they cover the front side of the lending equation. Then there's obviously the back end. There's the loan servicing and, in unfortunate situations, the liquidation. So the SBA 50/50, it does define when you should get collateral appraised. So if you have a servicing request involving some type of change, let's just say you want to do a substitution of some collateral. Well, they dictate that you should get an equipment appraisal before you go ahead and do that, just to make sure that you are swapping like for like. And then obviously on the bad side of the equation, if you have a workout or a liquidation, the SOP wants you to try to secure the collateral as early on in the process as possible. So securing it could mean going out and doing your own site visit, getting your own list, but at some point they're going to want you to have that list appraised. So it doesn't really say, hey, you need to do the appraisal first. It just says, hey, go out there and take a look at the equipment, identify it, inventory it, figure out what the condition is, take pictures of it, and then at some point, obviously, if it's going to go into the liquidation part, or you might even need it for your workout analysis, get it appraised. So that's one of the other situations where you might end up needing an equipment appraisal. So obviously, I've covered all of the lending-oriented uses for an equipment appraisal, but just because we're doing a webinar on equipment appraisals, I just wanted to kind of throw out there, just for everyone else's own education, different reasons for equipment appraisals. Whether it's divorce, estate planning, insurance. There's many other reasons for them besides lending. We don't really do them for much other than lending, but I know others do. And here is one of the frequently asked question is, do I need a site visit? So for the 504 and the loan servicing liquidation, it's very clear. The SOP does require that you get a site visit. For the 7A program, the SBA does not require it. It's not written anywhere there are no equipment appraisal requirements under the 7A program. So it's up to the lender at that point. And other credit decisions, we would say it's up to you and your own credit policy. So if you're working outside of the SBA program and you need an equipment appraisal, whether or not you got a site visit would be up to you. Here's my recommendation. If it's equipment that is easily identifiable, we are comfortable doing it as a desktop. If it's equipment that's not easily identifiable, complex manufacturing lines, very complex CNC machineries, those things sometimes are not very easy to identify, to be able to appraise as a desktop. In those particular cases, we recommend to the lender that, hey, let us come out there. We need to take a look at this. So, your equipment appraiser can also help you make that determination on whether or not you should get whether or not you should get a site visit. All right, so let's put our appraisal hats on. How do we do an equipment appraisal? So I'm going to try to make it as simple as possible for the first set. It's one of the approaches that we use is called a market approach. It's very similar to how a residential real estate works using comparables. Okay, so let's just say we have a 2010 Peterbilt 337 day cab. It's basically a tractor trailer, and has 145,000 miles on it in in good condition. So I go out and I find 3 comps. My first comp, all 3 of my comps, because Peterbilt 337s are very easy to find, are of the same year and of very similar mileage, just varying in condition. So I have then 3 options. I have a few different options on how I want to appraise it. So I have 3 different comps here. I can do a simple average if I wanted to and say it's worth 40,000. In this particular case, I might do something a little different, though. I might not just take a simple average. I might say, hey, you know what? Comp 2 is very close to the comp that I have. I think the value is probably around 41,000. So you can use whatever methodology you want to use, whether it's a simple average or a weighted average, or just, after having a few different comps saying, no, you know what, this one's the most reasonable, and it still falls within the other comps that I have, I'm going to go ahead and just use 41,000. Obviously, as appraisers, we are going to note that in our work file, why we use the number, but just wanted to give you an idea of different ways to potentially come up with a value for a piece of equipment. So where do we get this information? Well, there's websites out there that obviously have lots of trucks for sale and also sold. A Commercial Truck Trader is the one that I like using the most. Sometimes you will get lucky and you will find sold comps, for these items. However, most of the time, and especially if you guys are looking for and don't have access to specialized databases, you're not going to find sold comps. So what do you do in that case to value a piece of equipment? So in this particular case, you could do the same exact thing, but you can go out and look for the same exact truck that's for sale. And the idea is that, hey, if you're going to find 3 to 5 comps and they're all pretty close in range, well, the chances are that that's basically what the fair market value of that piece of equipment is. So if you have 3 trucks and they're all selling for $39,000, someone's asking for $40,000, someone's asking for $41,000, you know what? You're pretty close on value there. So, you could say, hey, listen, let's take away maybe 10% for some negotiation factor, and let's take a simple average of the 3, and at least you got a pretty good average, a pretty close estimate of what you might think that piece of equipment is worth. That works with a lot of different types of pieces of equipment. So it's a really good way for you to help you guys estimate your own values for maybe some initial underwriting or for cases where you might not even need an equipment appraisal. The other approach, which is the cost approach. Now, the cost approach is much harder to do on your own, in my opinion. It's similar to like using the cost to replace method in a more of a real estate appraisal. Here I have a 2006 Haas. It's a CNC machine. It's a horizontal CNC. Basically cuts metal into different shapes on many different axes, and it's all computer controlled. One of these puppies, brand new, is $200,000. All right, so it's a 2016 model. How much is it worth? I'm saying it's worth $180,000. So the price new is easy to find. You can call the dealer. You can look it up online. You maybe even look at the depreciation schedule sometimes if you don't have access to anything else. But then how do we figure out that present worth? Now, that's the tricky part. You can calculate it yourself. And so you might not be able to find a used 2016 Haas, but let's just say you can find a 2016 Haas EC2000, right, for sale, or that's sold, and it's sold for let's just say it's sold for $200,000 a couple months ago. Well, brand new, that machine is $230,000. Well, you know that these machines on average depreciate 15% over 3 years. So in that case, you could use the 15%. So the reciprocal of 15%, which is 85%. So the machine, you could use that number as the present worth. You could use 85%. Obviously, I'm using 90 here. I got mine from one of the tables that I use through the NEBB research that we've done. So there's different ways to go about doing this. You can also call up a dealer sometimes and ask them. If you have a very big piece of machinery, dealers are very open to talk to lenders. They're not as open to talk to us sometimes, but they're definitely open to talk to lenders, especially if you guys are actively financing their equipment. They want to talk to you. They want to give you information that you need so that they continue to finance, so that you guys continue to finance their equipment so that they continue to sell it. So never be afraid to call a dealer. Explain who you are, explain what you do, and they will give you a wealth of information. So what do you need to get an equipment appraisal? Essentially, all we really need is a list. If we're doing a desktop report for you, all we need is a list. Once we have the list, we will engage the report. We will once we will basically spread the list and see what other information we might need. Maybe we're missing some mileage. Maybe we're missing some model numbers, or maybe we just need to ask questions about a particular piece of equipment. If it was custom, what it was made out of, what its output is, if it has an engine, how big it is, what type it is, things like that. Once we have all that information, that's when we start to appraise the equipment using the market approach and the cost approach. And then again, 7 to 12 business days later, we deliver a report to the client. And the only difference between that, obviously, for a desktop report and a summary report is once we're engaged in a summary report, instead of sending a list of questions to our contact, we are going to call the contact to set up a site visit. So we try to make the process as simple as possible, especially from the lender's perspective. We try to take care of as much of that work as possible so that you guys aren't stuck doing it. So this, I'm done on my end with all the topics that I wanted to try and cover today in this webinar. But I would love to open it up to any questions that any of our participants out there have.
Awesome. We do have one question waiting, but as well, anybody that has a question, feel free to type it into the little question pane on your right-hand side, so we can get those answered. And as well, if I know we've got many Mountain Seed clients on the call, if you're looking to order one of these, there is, you may have noticed, there is a machinery and equipment appraisal order type now in your drop down on the order page. So that's how you find out how to do it. So one of the questions was, how critical are the various attachments to the value of the equipment? For example, an excavator, bucket, thumb, rock hammer, etc.
So when we're appraising it, it is important. So typically, when we go out, obviously we're going to know exactly what we're dealing with. But sometimes when we have a desktop approach, the different attachments aren't given to us. So unless they're specifically stated to us, we would appraise as if it was to come with just a standard bucket. If it has a rock drill on it or something instead, then we would definitely appraise it as if it had that. And to do that, we would almost appraise it as two separate pieces. We would appraise the excavator, subtract out a little bit for a bucket, and then go ahead and appraise the attachment itself, because we can usually find some good comps on the attachments, and then add that in to the value less the bucket. Unless they have the bucket laying around too, and that we're appraising as part of it, then we might even do it as two separate pieces versus just one.
I have a personal question. What's a thumb?
What's a what?
So one of the questions was, for example, an excavator, bucket, a thumb, or a rock hammer. I've never heard of a thumb. I don't know what that is.
I don't think I said thumb.
No, that was the person asking the question did. Anyway, just shows you the little knowledge that I have on machinery and equipment appraisals. Any other questions? I don't see any other questions. So if there's no other questions, we're going to go ahead and wrap up. I'm super grateful for Rahul and Reliant. Actually, I do have another question that just popped in, so don't hang up yet. So this other question is, I have an FBO with a variety of equipment, like fuel trucks, airplanes, helicopters, dicing machines. Can an appraisal be done with a property on an aircraft condition report?
Yes. Yes and no. One thing I want to say is I don't do aircrafts. They're a whole different beast. However, the appraisers that do will require the flight book, the condition reports, any maintenance reports that you might have. They go through a lot of information before they're going to opine on value for an airplane. There's a lot that goes into them. So to simply answer the question, yes, the condition report will be at least one of the items that the appraiser will ask for. If you're ordering an equipment appraisal for an airplane, definitely use an equipment appraiser that's specialized in doing those. There's, I would say that's definitely one of those situations where you want to use someone that's specialized within it. It's one of the reasons why I haven't really gotten into it. I really just haven't had the opportunity to either. So it sounds really cool, but it's also it definitely takes a little bit more further education that I have not myself gotten yet.
Rahul, for the benefit of the person asking the question, when you get these types of requests, is there a particular aircraft appraiser that you refer people to?
I don't have a particular one, just because we usually deal with the SBA, and I haven't really had a lot of airplanes come across my way. I know if somebody specifically needed an airplane appraisal, if you just let me know, I'll find you someone. We'll go through the NEBB and we'll find someone with the qualifications, or we'll even go to the outside of my organization. We'll go to the ASAs and we'll find one that has they have a specific designation, or I don't know if it's a designation or if it's like an addendum, and they have a specific course on just doing airplanes.
Okay, cool. Another question came in. What are the fees, or how do you price? Probably not the specific fees, but how do you price the types of assignments? What goes into the price?
So typically it's priced per piece. So for Mountain Seed, we've tried to create a very cookie cutter approach to pricing, even though it's very difficult. We're trying to keep all of our reports up to 15 pieces at $750. So the minimum report fee is $750, whether you're appraising 1 or 15. And then each additional piece is $50 for a desktop. On the summary side, it's $1,500 and then $75 for each piece over 15. Now, where that starts to change is in two ways. If we're looking at 15 very complex manufacturing lines, then those need to be custom quoted. Or 15 very large pieces of MRI, or like 15 different MRI machines or something like that, multi-million-dollar machines, then we might need to tweak the quote a little bit. Or if you just have 100, 150 pieces, we can definitely help with volume situations as well. Unfortunately, it's a case-by-case basis. That's when we start to price more by the hour, or, as a project versus pricing per piece. But if we're talking about smaller appraisals, we typically can work within the per piece pricing that we've set forth.
Cool. Any other questions? Okay. Well, again, super grateful for you, Rahul, and for Reliant participating in 2 webinars. If you want to learn more, obviously there's Rahul's email at the bottom, or you can email us at Mountain Seed. One of our missions here is to add value to everybody we come in contact with. So these webinar series have been a great way to do that. They are not a way to pitch a product, but more so a way to provide education to everyone, like we have in the past with whether it's economics topics or fintech or appraisals or environmentals or whatever it is. So I hope this was really valuable to you guys. We will be back up with our series in August. I don't know that we have settled in on what it is, but you will be notified. And if you need help ordering any of these, obviously, if you're a Mountain Seed client, feel free to reach out to us, and we'd be happy to walk through, or reach out to Rahul directly. So thanks, everyone. Thanks, Rahul, and we will talk again soon.
Everyone have a good day. Bye-bye.